Okay, so as every one of you has commented for audit committee video, so here is the next video after bank audit on audit committee. Hope you like this video too. I'll keep it very short as the exams are coming soon. The first topic which we'll be discussing is issues of corporate governance. So you can see that there are 47 pages in study mat of ICI. So to shorten it down for revising, you can highlight in your book itself. In issues of corporate governance, there are given many issues which are addressed in the LODR regulations. The first point is responsibilities and key functions of the board. So you can highlight this much: responsibilities and key functions of the board. Second is the code of conduct and vigil mechanism. Third is the composition meetings. Yeah, so then there is composition meetings, powers, rules and responsibilities. Fourth is the management of subsidiary companies. So if we summarize it till here, let me write it down in short for you. Responsibilities of board, then is the COC, which is code of conduct. VM is the vigil mechanism. Then is the management of SC, that is subsidiary companies. So if you recall it now, it's so easy to recall: responsibilities of board, COC, vigil mechanism and management of SC, that is subsidiary company. The fourth point is procedures related to risk management, disclosures on important issues regarding to related party transactions. So now again, if you summarize these 2 points, the first is related to risk management, that is RM, and the second is related to RPT, that is related party transactions. So now if we summarize all the 6 points, there was responsibility of board, then is the COC, then is vigil mechanism, then is management of SC, RM which relates to risk management, and RPT, that is related party transactions. Then the 2 points, the last 2 points are very easy to learn, that is based on compliance certificate. So both the points are talking about compliance certificate. One is by the CEO and CFO. So in the first point, the compliance certificate is issued by the CEO and CFO, and in the second point, the compliance certificate is from either the auditors or the practicing CS. So if you recall, both the points is easy to recall. CC, that is compliance certificate, one is by CEO and CFO, and the other is by auditors or PCS, that is practicing CS. Okay, so a total of 8 points are done, which is more than enough. Now the next topic is applicability of LODR. Okay, so the applicability of LODR regulations also you have to learn. In this, the applicability is, the first is the listed securities. See, the in A point it is given specified securities listed on main board or SME exchange. For this you can directly write it here: listed securities. Then is the non-convertible securities. Then is IDR, that is in Indian Depository Receipts. Then is securitized debt instruments, security receipts, mutual funds units, that is units issued by mutual fund. And then there is any other securities. So if we recall it, there is listed securities, then there is non-convertible securities, then there is IDR, that is Indian Depository Receipts, then there is mutual fund units, and the last one is any other. So okay, this was also easy to recall. Now if we come to the next topic, there is audit committee under LODR regulations. In this, if you see the first point, which is, it is the requirements are given that the audit committee shall have minimum 3 directors as members. 2/3 of members of audit committee shall be independent directors, and in case of listed entities having outstanding SR, that is superior rights equity shares, the audit committee shall only comprise of independent directors. If you can see in the below chart, this is summarized in a graphical form, like audit committee shall have minimum of 3 directors. So see here also, let me zoom out for you. Here also it was given minimum 3 directors, and here also it is written minimum 3 directors as members. So what is the first requirement? What is the first requirement? That there should be minimum 3 directors as members. Now what is the second requirement? 2/3 of members is equal to independent director. At least 2/3 of members shall be independent directors. Now the third criteria written here is, in case of listed entity having outstanding SR, that is superior right equity shares, shall only comprise of what? ID, that is independent directors. So all the three requirements of this point number 1 is covered here. Now it is easy to recall also. Now when we come to the second point, here it is written all the members should be financially literate. So we all know the meaning of financially literate. It was in law also, paper 4. That is, at least it should have the ability to read and understand the basic FS, that is financial statements. What is it? Is balance sheet, P&L and statement of cash flows. And at least one member shall be having the accounting or related FM expertise. So what should be? All members should have at least financially literate, that is able to read and understand FS, and at least one member shall have accounting or related expertise. So that's what is given in the graph also in the picture form. All members shall be financially literate and at least one member shall have accounting expertise. Now if we come to the third point, chairperson shall be an independent director and he or she shall be present at the AGM to answer shareholder queries. So here in the chart also it is given, chairperson of the audit committee shall be an independent director and shall be present at AGM to answer whose queries? Shareholder queries. So the second point was related to members should be financially literate, and the third point is related to chairperson. It is related to the chairperson. Now the fourth point is that company secretary shall act as the secretary to the committee. Again in the chart you can see it from here, company secretary shall act as the secretary to the committee. Now if these are done, this is enough. This is not much important, this one. Now the next topic is meetings of audit committee. So this is very important, the meetings of audit committee. Why it is important? Because for MCQ purpose also it can be asked from here. Limits are given, 3 limits are given. One is the number of meetings. So in the number of meetings, what it is given? The audit committee shall meet at least 4 times in a year. Yeah, so what it is given? How many times it has to meet? At least 4 times in a year. Okay, if we summarize it here, at least 4 times in a year. And then we have to see the second limit, which is gap. Gap, that is the time period or the time gap between the 2 meetings. So what is the time gap given here? Not more than 120 days. So if we write it here, it is 120 days. Now what is the third limit? The third limit is the quorum. So it is talking about quorum, which can also be asked in MCQ. There should be either 2 members or 1/3 of the members of audit committee, whichever is greater, that is higher. But there should be what? Minimum of 2 independent directors. So in quorum the minimum requirement is 2 independent directors must be present, or 2 members or 1/3 of audit committee members, whichever is greater. Okay, so these 3 you have to learn: number of meetings at least 4 times, gap not more than 120 days, and quorum. Now the next topic is powers of audit committee. In powers of audit committee you have to learn all the 4 points, so you can easily learn this using the memory trick. That is, the memory trick is ISLA. So from I you can remember to investigate any activity, from S you can remember to seek information, from L you can remember legal advice, and from A you can remember attendance. So if we recall again, ISLA, powers of audit committees, ISLA. From I it is investigate, from S it is seek information, from L it is legal advice, from A it is attendance. So all the 4 points are recalled easily. So now the next topic is role of audit committee. So in role of audit committee also many points are given. So if you cover this point, reviewing with the management the annual financial statements and other auditors report thereon before submission to the board for approval with particular reference to. So this can also be asked as a separate question. So both will be covered in this separate question also, and role of audit committee also. So it's better to learn this point. Matters required to be included in DRS. What is DRS? In Director's Responsibility Statement. Matters required to be included in the DRS. Now, changes. So, what are the changes? Changes, if any, in the accounting policies and practices. And if there are any changes, then what we have to specify? The reasons for the same. So, till now we studied 2 points. One is the matters to be included in DRS, that is Director's Responsibility Statement. Another is the changes. Changes in what? In the accounting policies and practices. Now the third point is major accounting entries involving estimates. So it is related to the estimates. Then is the significant adjustments. Then compliance with listing and other legal requirements. Fifth is disclosure of what? Any RPT. RPT, that is related party transactions and modified opinions. So if we summarize it, first was the matters to be included in DRS. Second is the changes in accounting policies and reasons. Third is the estimates. Fourth is the adjustments. Fifth is the compliance. Then is disclosure of RPT. And the last one is opinion. So whenever you have to revise, you don't need to revise everything like read the whole sentence. You can just revise by recalling it as matters, changes, estimates, adjustments, compliance, disclosure and opinion. So if we recall it again, matters, changes, adjustments, compliance, estimates, disclosure and opinion. Now if we come to the next topic, it is resignation. So this topic is also important for MCQ perspective. Resignation of statutory auditors from listed entities and their material subsidiaries. So again, this is important. Now if we come to the chart form, here it is given that all listed entities or subsidiaries while appointing or reappointing an auditor shall ensure compliance. So this is the compliance requirements given. So what are the compliance requirements as auditor's perspective? Here it is given if the auditor resigns within 45 days. Within 45 days. Next it is written if the auditor resigns after 45 days. What is given? After 45 days. So you can see the difference. This is for within 45 days. This is for after 45 days. Then is if the auditor has resigned after signing the limited review or audit report for first 3 quarters. Okay, so there are 3 cases. What if within 45 days? What if after 45 days? What if after signing the limited review or audit report for first 3 quarters? So what it has to do, if within 45 days, then it has to issue the LR or AR for such quarter, only for that quarter. And if after 45 days, then for that quarter as well as the next quarter. If after signing for first 3 quarters, then for such financial year as well as audit report for such financial year. So there it will go for the whole year. Now other conditions also you will once go through these points. Then in the chart again in C point there is given obligations of listed entities and its material subsidiary. Now this is the obligation of the practicing CS. So the PCS, that is the practicing CS, shall certify compliance by listed entity on following points. See the format of information to be obtained from the statutory auditor upon resignation, cooperation by listed entity and disclosure. Disclosure of what? Of its views, audit committee's views to the stock exchanges. So here the topic ends. नेक्स्ट टॉपिक कवर करेंगे वो कौन सी है, ऑडिट कमिटी अंडर सेक्शन 177 ऑफ द कंपनीज एक्ट 2013. तो दिस वी हैव सीन इन पेपर 4 लॉ also. See what is given. All public companies with a paid up capital of 10 crore rupees or more, turnover, outstanding loans, debentures and deposits. So these three limits are there. What is the limit? Every listed public company every listed public company and the following classes. So in case of listed public company, everyone, it applies to everyone. But in case of other companies, the following classes of companies will be required to constitute an audit committee. Who are required? All public companies. So all public companies with a paid up capital of at least 10 crore rupees. So in case of paid up capital, that is POC of greater than equal to 10 crore. In case of turnover, greater than equal to 100 crore. In case of loans, debentures, deposits, greater than 50 crore rupees. So what you have to remember? You have to remember that in paid up capital and turnover, there is greater than equal to. What is there? Greater than equal to. But in case of loans, debentures, deposits, there is only greater than and not greater than equal to. Okay, and however, following classes shall not be covered. So what are these? Exempt. These are not required to constitute an audit committee. So who are these? Joint venture, wholly owned subsidiary and dormant company. Who are these? Joint venture, wholly owned subsidiary and dormant company. Joint venture, wholly owned subsidiary and dormant company. These three are not required to constitute audit committee. No audit committee. Now functions you can just go through once. Then there is review of information by audit committee. What is the topic? Review of information by audit committee. Just now we are in page number 13. So here is management discussion and analysis. So what is the first point? Management discussion and analysis. How you can remember this? MDNA. That is management discussion and analysis. The next point is statement of significant related party transactions. That is how you can remember this? RPT, that is related party transaction. So just now we studied management discussion and analysis and related party transaction statement. Now the third point covered is management letters of internal control weaknesses. So this is ML, that is management letters or letter of internal control weaknesses. Letter of internal control weaknesses. Now there is internal audit reports relating to internal control weaknesses. So again this is related to internal control weaknesses, internal audit reports. So 2 points are similar. There is management letters, internal control weakness, and second point is internal audit reports, again internal control weaknesses. So here is also internal control weaknesses, here is also internal control weaknesses. Here is management letters, here is internal audit reports. And the first point was MDNA, that is management discussion and analysis. The second point was RPT, that is related party transactions. Now statement of deviations, that is SOD. Now one is the quarterly statement of deviations and one is the annual statement. So quarterly statement and annual statement. What is their SOD? That is statement of deviations, quarterly statement and annual statement. Now in this one there is appointment, removal and terms of remuneration of CIA, that is Chief Internal Auditor. So this way you can try to recall every point. There is MDNA, there is related party transaction, there is management letter, internal control weakness, internal audit report, Chief Internal Auditor and SOD, that is statement of deviation, 2 statements, quarterly and annual. This was the review of information by audit committee. Now if we come to the next point, that is role of auditor in audit committee. What is the role of auditor in audit committee? So now if we come here, there is Section 177 of the Companies Act 2013 provides the auditors of a company and KMP have the right to be heard in the meetings of audit committee when it considers the auditor's report, but they shall not have the right to vote. So what will be there? There is right to be heard, but not right to vote. Okay. So now if we come to the next topic, there is verification regarding composition of board. So now there is regarding the composition of board. Above we saw the composition regarding audit committee. Now we will see verification regarding composition of board. So see, there is directors comprises an optimum combination of executive and NED See, here it is non-executive director, that is NED, and executive director, that is ED. So there should be a combination of both, where at least one woman director and not less than 50% NED. So this way the limits you have to remember. This is again important for MCQ perspective also. So here I have highlighted the points. Go through these points, learn the limits. Now we'll come to remuneration of directors. Again, this is important. Here there is some disclosure requirements which it is to be fulfilled. What are the disclosure requirements regarding directors remuneration? So all transactions of NED, the listed entity, shall be disclosed in the annual report. So the first point is regarding what? The first point is regarding the transactions. Then the second point is related to criteria of making payments to NED, and it can be displayed alternatively on the website also. Then in addition to the disclosures, the following disclosures on remuneration shall be made. What are the disclosures? Elements of remuneration package under major groups such as salary, benefits, these all. Then details of fixed components and performance linked incentives with the performance criteria which we checked here. Then service contracts, notice period, stock option details. So these are very easy. Then there is approval of remuneration of directors. All fees or compensation, if any, paid to NED including independent director, paid to NED or also including if paid to independent director, shall be recommended by whom? Recommended by board of directors. So again this can be a point for MCQ. You have to remember this, that all fees and compensation any paid to NED or independent director shall be recommended by whom? Board of directors, and shall require approval of what? Approval of shareholders in general meeting. Approval recommended by board of directors, but approval by shareholders. Approval is required by shareholders in general meeting. You also can learn this limits given. The fees or compensation payable to executive directors who are promoters or members of the promoter group shall be subject to approval of the shareholders by they have to take approval by special resolution in general meeting only if, that is if annual remuneration payable to such executive director exceeds rupees 5 crore or 2.5% of net profits. So whichever is higher, again what we have to see, whichever is higher. Or the second condition or is when there is more than one such director, the aggregate annual remuneration to such director exceeds 5% of net profit. So if any of the one of the condition is satisfied, then we have to take special resolution in general meeting approval. Now the next topic is obligations with respect to employees, including senior management, KMP, directors and promoters. So if you all are finding this video really helpful, then please subscribe this channel and do comment in the comment section if you need video regarding any other chapter too. So in this the requirements are given. Again, this is also important for MCQ perspective also. So we have to learn this. The board shall meet at least how many times? 4 times a year with a maximum time gap. So here it is given the number of meetings. So this we have to keep in mind. The board shall meet at least 4 times in a year. Now the time gap, the second limit is for the time gap, that is 120 days between any two meetings. Then the quorum is given. This you have to learn. Then again the second point, a director shall not be a member in more than 10 committees or act as a chairperson of more than 5 committees across all listed entities in which he or she is a director. So these are points you have to see. Then there is this point, an independent director shall be held liable only in respect of such act or omission or commission by listed entity which had occurred with his or her knowledge. So this keyword is important, if with his or her knowledge attributable through board process and with his or her consent. Now the next point is given, the independent directors of the listed entity shall hold at least one meeting in a financial year. So what is the limit? The independent directors of the listed entity shall hold at least one meeting. How many meetings? At least one meeting in a financial year. Right. Without the presence of non-independent directors. So only the independent directors will be there, and without the presence of members of the management, and all the independent directors shall strive to be present at such meeting. That is, everyone should be present. See, this is also given here, that in reference is given to paper 4 of CA Final. Chapter SEBI, that is Securities Exchange Board of India. Now again there is this point, an independent director who resigns or is removed from the board of directors of listed entity shall be replaced by whom? Replaced by a new independent director. Shall be replaced by a new independent director at the earliest but not later than, this time limit you have to remember, at the earliest but not later than the immediate next board meeting or 3 months from date of such vacancy, whichever is later. So this is very important. Replaced by a new independent director at the earliest but not later than immediate next board meeting or 3 months from end of such vacancy, whichever is later. So here you have to remember whichever is later. Now a high value debt listed entity shall undertake directors and officers insurance for all its independent directors for such sum assured and for such risk as may be determined by its board of directors. Now again we come to the next topic, that is meeting of board of directors. So obviously in this the criteria will be given for in respect of board of directors meetings. This is again same as paper 4 law. Now we come to the next topic, that is code of conduct. In code of conduct, see what is given. The board shall lay down a code of conduct for all board members and senior management of the listed entity. So the board will lay down the code of conduct. Who will lay down the code of conduct? Board. And for whom? For all board members. For all board members and senior management of listed entity. Now all board members and senior management personnel shall affirm compliance. So code of conduct is to be complied on an annual basis. Now annual report of the company shall contain a declaration to its effect signed by the CEO. Now code of conduct shall be posted where? On the website. So these are very, very basic points. Here it was given by whom and for whom, and affirm compliance, then to be posted on website, then the declaration part, then shall suitably incorporate what? The duties of independent director. Duties of independent director. Now where are the duties of independent director mentioned? In the Companies Act 2013. Now there is vigil mechanism. So in vigil mechanism, what is given? The listed entity shall establish a vigil mechanism, or it is also known as the whistleblower policy, for directors and employees. For whom it is there? For directors and employees. Why it is there? To report genuine concerns. To report genuine concerns. Then this mechanism should also provide for adequate safeguards against victimization of directors or employees. Now the details of establishment of such, again in COC also what we saw, there was code of conduct should be mentioned on the website. Now here also it is written, vigil mechanism shall be disclosed by the company on its website and its board's report. Okay, so now there is subsidiary of listed entity. So in this, the subsidiary of listed entities, first we have been given the definition of material subsidiary. So as per regulation 16C, what is material subsidiary? It shall mean a subsidiary whose income or net worth exceeds 10%. So whose income or net worth exceeds 10% of consolidated income or net worth. So what you have to remember, this 10% limit respectively of the listed entity and its subsidiary in the immediately preceding accounting year. Now regulation 24(1) provides that at least one independent director on the board of directors of the listed entity shall be a director on the board of directors of an unlisted material subsidiary, whether incorporated in India or not. So these are just the limits that are, or requirements that are provided, that at least one independent director on the there is this listed entity and there is this material subsidiary. So listed entity का जो भी independent director है उसका at least एक independent director जो board of director of unlisted material subsidiary है उसका director होना चाहिए. Then the second point talks about the audit committee of the listed entity shall also review the FS, in particular the investments made by the unlisted subsidiary. So what will the audit committee of listed entity do? It will review the financial statements of the investments made by the unlisted subsidiary. Now the minutes. There is this requirement regarding the minutes. The minutes of the board meetings of the unlisted subsidiary shall be placed at the board meeting of the listed entity. So the minutes of the board meeting of what? Of the unlisted subsidiary. You can remember it as ULS. The unlisted subsidiary shall be placed at the board meeting of the listed entity. So if you write it this way, it is very easy to recall that the minutes of board meeting of ULS shall be placed at the board meeting of the listed entity. Now the term significant transaction or arrangement shall mean any individual transaction or arrangement that again exceeds or is likely to exceed this 10% of total revenue or total expenses or total assets or liabilities of what? Of the unlisted subsidiary. Then in the fourth point, again the limit is related to the disposal of shares. A listed entity shall not dispose of shares in its material subsidiary, resulting in reduction to its shareholding to less than or equal to 50%. So we are talking about listed entity. So one is the listed entity and one is the material subsidiary. So what should listed entity not do? Shall not dispose of shares in its material subsidiary, resulting in reduction of its shareholding. So when the listed entity will dispose of shares in its material subsidiary, of course its shareholding will reduce. So it should not reduce to less than or equal to 50%, to less than or equal to 50% reduction. Or it should not cease the exercise of control over the subsidiary without passing a SR in its general meeting. So if it has to lose the exercise of control over the subsidiary, then what it should do? It should pass a special resolution in general meeting. So these are the limits. Again, this one you can read: selling, disposing and leasing of assets amounting to more than 20%. So this limit you have to remember, amounting to more than 20% of the assets of the material subsidiary on an aggregate basis. So it will require prior approval of shareholders by way of, again, what? Special resolution. Now, where a listed entity has a subsidiary which is itself a holding company, the above provision shall apply to the subsidiary in so far as its subsidiaries are concerned. The policy for determining material subsidiary shall be disclosed on the company's website. So again, we saw this in code of conduct, vigil mechanism, and now we are seeing it in case of material subsidiary. Shall be disclosed on website and a web link thereto shall be provided in the annual report. Now there is secretarial audit and secretarial compliance report. This you will go through. Then there is NRC, SRC and RMC. This, similarly to what we have studied in paper 4 law, you can read it on your own and learn the limits. There is charts also given. Then there is statement of deviations, that is, we read it as SOD. Where we read it as SOD above, that was quarterly statement and annual statement, if you remember. So there is statement of deviations or variations. In this, what the entity has to do? The listed entity shall submit to the stock exchange the following statement on a quarterly basis. On a quarterly basis for public issue, right issue, preferential issue, that is indicating deviations, if any, in the use of proceeds from the object stated in offer document or explanatory statement, and indicating category wise variation between projected utilization of funds. The statement shall be continued to be given till such time when the issue proceeds have been fully utilized or the purpose have been achieved. Where an entity has raised funds through the preferential allotment or qualified institutions placement, the listed entity shall disclose every year the utilization until it is fully utilized. So see, category wise variation should be there. There should be category wise variation. Then at what time, till what time statement shall be continued to be given? When fully utilized or purpose is achieved. In third point also, till when? Till the utilization is fully utilized. Now audit committee shall mandatorily review quarterly statement of deviations, including report of monitoring agency. See, here also I told you SOD, there is two. There is quarterly statement and annual statement. Now here also there is given quarterly statement, then there is given annual statement. Now the next topic is information to shareholders. In case of appointment of a new director or reappointment of a director, the shareholders must be provided with the following information: brief resume, nature, disclosure of relationships, name of listed entities, shareholding of NED. See, the listed entity shall send a soft copy of full annual report to those shareholders who have registered their email addresses or hard copies. Now, not less than 21 days before the annual general meeting. Now there is transfer or transmission of securities. In this, the most important point is, however, The board of directors or delegated authority shall attend to the formalities pertaining to transfer of securities at least once in a fortnight. Now, compliance certificate, just I'm underlining the points, you can go through these points. Now there is this topic, disclosures, management discussion and analysis. This above also we read in the issues addressed in LODR or somewhere we read it, the management discussion and analysis. In this you just have to learn the points. There is industry structure and developments. Then from SWOT analysis you can recall this, opportunities and threats. Then risk and concerns, outlook, segment wise or product wise performance, internal control systems. Then there are too many ratios which easily you can remember. There is debtors turnover ratio, that is DTR, inventory turnover ratio, interest coverage ratio, current ratio, debt equity ratio, operating profit margin, net profit margin. Then there is report on corporate governance at the end, from the end of each quarter within 21 days. These limits are very important. Then in MCQ also it can come. Then there is auditor's certificate, adverse or qualified statement. Then depending upon the facts and circumstances, some situations may require an adverse or qualified statement or a disclosure without necessarily making it a subject matter of qualification in respect of compliance of requirements. For example, number of NED. See, all the points which we learned above, this is just the summary of those, that not less than is less than 50%, then qualified independent committee is not set up, audit committee does not meet 4 times. So everywhere the limits which we learned, those are written here. Okay, so now you all can go through the questions that are given below, and if do not forget to subscribe this channel, and if you need the same for any other chapter you can write it down in the comment section. If you want to download this PDF, the highlights you will get of the ICA study mat, you can download it from the Telegram channel. The link is given in the description box.